How do IRS tax fraud investigations really begin? If you believe IRS criminal tax cases start with an arrest or a raid, think again. They don't. A lot of criminal tax investigations begin very quietly, behind the scenes, clandestinely. Many inside of what looks like a routine civil audit. No warning, no accusation, just questions that slowly change in tone and character over time. Today I'm going to explain how IRS tax fraud investigations really begin, what signals shift from civil to criminal, and what you should do before the government decides you acted willfully. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney and CPA, and for nearly 30 years I've defended clients in IRS audits, eggshell audits, reverse eggshell audits, and criminal tax investigations nationwide and internationally. Understanding how criminal cases start is often the difference between resolving a tax issue civilly and facing a criminal tax prosecution, and not everybody is trained to deal with it. IRS criminal cases usually start when an examiner or somebody from CI notices things like unreported income, large unexplained deposits, aggressive deductions, undisclosed offshore accounts, crypto discrepancies, unreported crypto, payroll irregularities, including not paying withholding, inconsistent records. At first, most audits start off as civil, but behind the scenes, the examiner begins documenting criminal tax intent if they see it, and believe me, they're going to note any badges of fraud they find. So what are badges of fraud? When the IRS, or a state for that matter, suspects tax fraud, they look for patterns, not isolated mistakes. Common badges of fraud include repeated underreporting over multiple tax years, false or altered document, unreported cash transactions, the use of multiple entities to hide income, the failure to file returns when you're required to, destruction of records after the fact, misleading statements to agents. The more badges that appear, the closer the case moves towards criminal tax referral. So when does the civil audit turn criminal? Well, at some undefined point, the civil examiner may involve IRS criminal investigation, CI. This doesn't always mean you'll be told or your representative immediately when that happens. Often, the audit continues while CI quietly evaluates your case clandestinely in the background. This is known in the industry as a reverse eggshell audit, and it is one of the most dangerous phases for taxpayers whose lesser advisors, untrained advisors, don't realize what's happening. Words matter more here than numbers. Many criminal tax cases aren't built solely on math errors. They're built on statements, emails, text messages, phone calls, casual, unthought-out explanation, trying to explain inconsistencies without the use of counsel. These type of statements often provide the government with the intent they're looking for, your criminal intent, and evidence of it. So, how can a voluntary disclosure help? If you get to the government and knock on their door before they bang down your door, if handled properly, a voluntary disclosure may prevent criminal tax prosecution. But everything revolves around timing. If the IRS already has your information, or if CI is already involved, the window to make a disclosure may close. Voluntary disclosure must be strategic, complete, and handled under attorney-client privilege and work product privilege by an attorney. So why is privilege so critical here? Well, accountants and tax preparers cannot provide legal work or privilege. Their communications could be subpoenaed. They could be on a witness stand testifying against you. Only a tax attorney can protect strategy and communications under attorney-client privilege and work product doctrine. Without that protection, a civil audit can become a criminal case exponentially faster than most people would expect, and you can go about creating government witness number one against you if you hire someone who's not an attorney, or worse yet, the original preparer. Keep in mind, your original preparer is likely to throw you under the bus rather than wind up in a jail cell next to you. They also want to continue to earn a living and not lose the right to practice. So how do we defend tax fraud cases? Well, when we step in, preferably at the outset of an audit, the earlier the better. We take over IRS communication. We assess civil versus criminal risk. We stabilize the audit while preserving privilege. And if we have to, we reconstruct records very carefully. We negotiate before a criminal referral occurs. And if one does, we defend clients if CI becomes involved. Our goal is simple: stop civil cases from becoming criminal ones. IRS criminal cases don't start off with handcuffs. They start off with clandestine silence, documentation of suspicious patterns, and unanswered questions. If you're under audit, and worried about tax fraud exposure? Whenever you do, don't guess. Call the tax law offices of David W. Klasing at 800-681-1295 or visit Klasing-associates.com to schedule a confidential, reduced-rate initial consultation today. Early intervention right at the outset of the audit keeps your options open, and potentially criminal cases civil. To date, no client we've ever represented in an audit, high-risk audit, has been criminally prosecuted for tax crime. Call me today, you won't regret it. Dave Klasing, Tax Attorney, CPA.